Welcome to Mark Arnold's Finance. So this last week was a crazy earnings week, and next week is a huge earnings week. So what I thought would be good is I picked some random companies to go over this past week, what their earnings were, if they beat, if they missed expectations, and this will give us a good overview of maybe what the economy as a whole is experiencing. So if you appreciate this type of content, be sure to subscribe to my channel. I'm also somebody that is very transparent, which we're gonna start with right now. As promised, I'm sharing my portfolio performance with every video. So right now, I'm happy to say I am back in the green at 1.43%. That's $566 gain. Amazon made a huge move up, so that was a big reason why my portfolio is in the green. Meta kind of went up, it went back down today. I did buy a share to start averaging down with that company. But yeah, so we're back in the green. But again, with this market and economy, I'm not expecting to stay in the green. I still think there's some turbulent times ahead. So if there's any questions you have on my portfolio, be sure to ask. I would be happy to answer any questions. So let's get started with the video and let's go through these companies I picked out and let's look at their earnings and a few other stats that I got and my opinion. So let's start with Snapchat. Now Snap, their revenue came in at 1.11 billion versus the expected 1.14 billion, so it was a slight miss there. Their earnings per share did beat slightly at -2 cents per share versus the -5 cents per share expected. Their daily active users did go up, which was good. It came in at 347 million daily active users versus the expected 343.2 million expected users. But their average revenue per user went down 4.5% year over year. That's not a good sign. If your daily active users are increasing, but your revenue per user is going down, not a good sign. So Snap did go down heavily because they already previously lowered guidance significantly and still missed in key areas. So Snapchat for me is a stock I would not invest in. I think their company is easily replicated. It's not one of the most popular ones, and it's just one that I would avoid. So Snapchat for me overall didn't do so well. Let's move to Ally Financial. This is a company I have on my watch list. I did a video on it. So their earnings per share came in at 1.76 versus the expected 1.9. So they missed there. Their net income fell to 454 million from the 900 million a year ago that they had. That's a big drop in net income. Now their revenue came in at 2.08 billion versus the expected 2.21 billion. So they missed there as well. So Ally Financial did not have good earnings. And I think that, them being a pure online bank and also with the interest rates were so low, their whole draw is that they're a high yield savings account kind of bank that draws people in, and I think they weren't able to do that. Now that rates are starting to go up pretty significantly with Ally, let's see if that brings some more people to their business within the next quarter or two. But overall, not great for Ally. Now AT&T, this one was very interesting. So revenue was a beat at 29.64 billion versus the expected 29.55 billion. Earnings per share was a beat at 0.65 cents versus the 0.61 cents expected. They added 813,000 post-paid wireless phone customers versus the 562,000 expected. That's a big beat. But where they kind of did not shine was their free cash flows came in at 1.4 billion versus the 4.62 billion expected. So free cash flows are down tremendously, and they lowered their free cash flow outlook from 16 billion down to 14 billion. So that's a $2 billion cut in their outlook of their free cash flows. So to me, that means people are not paying their bills, but there is a positive I found because AT&T, they're known for having a lot of debt. So I thought, let me see what their debt looks like. So if we look here, their debt's going down, guys. This is awesome. This is what I want to see as an investor with AT&T. They said that they were spinning off the Warner Media and all this other things so they can focus on paying down their debt, and they are doing it. They're putting their money where their mouth is, which is what I like to see. So I never thought I would say this again, but I might actually buy some AT&T because their stock did drop tremendously, and their dividend yield is back up huge in the 8 to 9%, I believe. So yes, AT&T I might add to average down because let's the revenue and EPS they beat. They added a lot more customers, subscribing customers, which is great. So yes, AT&T overall was okay for me, and I might add myself. Now, Bank of America, I thought it'd be good to do a bank. So their earnings per share came in at 0.73 cents versus 0.75, so a little bit of a miss. The revenue came in at 22.79 billion versus 22.67 billion expected, so it was a slight beat there. Their profit did drop though by 32% to 6.25 billion from a year earlier. So they took a 523 million provision for credit loss. So what that means is borrowers are less credit worthy now than they were a year ago and having a hard time paying those bills. So with Bank of America, I think these were just okay earnings. I still think they're a little bit overpriced for me, so I don't plan on buying, but that's Bank of America. IBM, this one was interesting. Their earnings per share, they actually beat at $2.31 versus the $2.28 expected. Their sales were up 15.54 billion versus the 14.22 billion a year ago. But the big thing with this company, why their stock is struggling, is because they did warn of a 3.5 billion hit from a strong dollar. So all their operations profits that are overseas that come in is going to take a hit because we have a stronger dollar. So for me, IBM I used to hold, I sold out. I don't see this company as a long-term hold. I just don't think it has a bright future. That is just my opinion. It has continued to suffer. I'm glad that I sold out. And so IBM for me, these were mixed. I'll give them an okay earnings. Netflix. Now, this one was interesting. They were expected to lose anywhere between 2 to 2.8 million subscribers, and they lost only 970,000. I know that sounds weird to say, but this was a beat when it comes to their subscribers. So their earnings per share came in at 320 versus the 296 expected, so they did beat there. Revenue came in at $8 billion, which is an 8.6% increase over the same period last year. And they did forecast that next quarter they expect to add 1 million subscribers. So that's a good sign. It's not a big number, but it's a good sign. And they're adding, of course, a cheaper ad-supported tier next year in 2023, which hopefully will help increase their profits, their revenue. So, with Netflix, what I will say is this was okay for me. Though they didn't lose as many subscribers as I thought, they're still losing subscribers. That's not a good thing. You want to see a company like this gaining subscribers quarter after quarter. So it's just something I think Netflix long-term is going to be a successful company. They are the leader when it comes to streaming. So I think this is an okay earnings. I do think they have a future. So if you are investing in Netflix, I do think that that's an okay thing. I think there's potential there and possibly even big potential in the future if they can really bring that big growth back. Now I thought we'd add a fast food restaurant. So Dominos Pizza. This one has become a popular stock I've seen with some other investors. So their same store sales fell 2.9% because of declining orders. People aren't ordering as many food products from Domino's. And their earnings per share came in at $2.82 versus the $2.89 expected. So they missed their earnings per share. Their revenue was a slight beat. It came in at 1.07 billion versus the 1.05 billion expected. But a few other things. They have a huge driver shortage. So the people that deliver the pizza to your house, they have a huge shortage of that. So what they're doing is 40% of the stores are utilizing call centers to take orders, freeing up their staff to focus on making the pizzas. So this is interesting to me. I never heard of this, but they're hurting. They're hurting trying to hire people. That's still a thing where companies just can't get people. They can't find people who want to work. So Domino's is hurting there. Now, because their revenue did go up slightly from what they expected, you would think with their same stores sales falling, how are they increasing revenue? Well, two things. They're increasing the price of their products to their customers, and they're increasing different franchising expenses to these franchising owners. So as a franchisee, you're having to pay already probably decent costs to run these businesses, and that might be something that'll just turn more people away from opening up new stores. So their future growth, we'll have to see how that goes. So Domino's to me was a bad earnings report. Didn't like it. So last one I want to talk about is American Express. Their earnings per share came in at $2.57 versus the expected $2.42. So they beat their revenue was a beat at $13.4 billion versus the expected $12.5 billion. And they really said that the main reason why they did so well is because business travel and travel in general is up massively. And I believe that there's so much pent up demand. Everyone I know around me is going on vacations. A lot of businesses that I know are sending their employees on business travel, different conferences, stuff like that. So this is a good sign as far as, traveling goes, and businesses they're starting to spend again. So it'll be interesting to see the next following quarters, especially during the winter months. Will this slow down, and will the grip of a possible recession and this high inflation take on a company like American Express? We will just have to see. But overall, I think they're the only one out of the bunch that did good. So let's review quickly. Snap did bad. Ally Financial did bad. AT&T did okay. They did beat on their EPS and revenue, but their free cash flows isn't doing so well, and I did like that they're lowering their debt. So I give them an okay. Bank of America was just an okay. IBM was just an okay. They had decent earnings, but they warned of a future $3.5 billion hit. Netflix was just okay. They had good earnings compared to what they were expecting, but they're still losing subscribers, which is not a good thing. So I give them an okay. Domino's Pizzas was bad. When your same store sales decreases, that's not a good thing. American Express was the only one that was good. That's the only one that I will give a good mark on. So we have 3 bad, 4 okay, and 1 good. What that tells me is overall it was more towards the negative range when it came to earnings out of these companies that I picked. So I think the economy is starting to slow down. It is starting to hurt. Is that enough for a recession? I don't know. We'll have to see. That's coming up soon. But I also want to let you guys know, next week is a huge earnings week. We have companies like Microsoft, which I own. I almost bought some shares of Microsoft today, but I don't know. I'm just a little nervous. Some analysts have lowered their expectations, actually, saying that the whole tech sector is still in for some pain. So I thought, let's see. Let's see next week. If it drops heavily before earnings, I'll buy, or maybe I'll wait till after to see if there's any misses. I think that will bring the stock down pretty significantly. Google's reporting earnings, so that will obviously be an interesting one with advertisement dollars. 3M is a company I own, so I'm excited to see what they are going to do. Albertsons is a big grocery chain, so that will be interesting to see how people are spending at the grocery store with all these prices going up. Chipotle, I think that will be interesting. Are people going out and eating? Coca-Cola, this is pretty much a staple. So if this goes down, that's not going to be a good sign. We have GM with the whole, increase in used cars and cars in general. Let's see how they do. McDonald's, a fast food restaurant, another one that I want to see are people spending their money. McDonald's is one that people will easily spend money, I feel. So if that slows down, that's not a good sign. Texas Instruments is another one. UPS, that's going to be interesting. Visa, I think that'll be kind of similar to American Express. Meta, of course, I'm bullish, so I'm very anxious to see how they do because they have not done good this year. If they have any drop in their daily users, that's going to be really bad for this company. And of course, the advertising dollars, I don't think that will really bounce back in a big way until next year. But let's see. This is going to be an interesting one. Ford kind of falls in line with GM. Kraft Heinz, kind of another one. If that goes down, that's not a good sign. Sherwin-Williams, that's kind of an insight to the housing market. T-Mobile, we saw AT&T, so let's see if it mirrors AT&T. Vici, that's one that I own. I love this REIT. It's an experiential REIT, mainly have properties on Vegas. So with travel going up, hopefully we see some positive earnings with Vici. I think that's what we can expect. Amazon, of course, I'm bullish on Amazon, but I do think there can be some pain with them. I think that they did have a very strong Prime Day, or Prime, it's 2 days, right? So let's see what that did for them and if that's in these numbers. Actually, it's not going to be, it's going to be in next quarters. But let's see how Amazon does, because they had a huge, awful earnings last quarter. Let's see what happens now, if they can turn anything around. Intel is one that I know is very popular, so I just want to mention that. MasterCard, so that will be similar to American Express, I feel. Pfizer, Roku, I know that's a big one that people are betting on. I don't think that's a good one, a good company, but if they have great earnings, then that's going to be great for a lot of people that are investing in Roku. Southwest Airlines, I think with travel up, they'll do well. AbbVie is one that I have, and I think AbbVie, I don't think we'll see any kind of big shocks with them. And then Chevron, Exxon, and Phillips 66. These three, with the higher prices at the gas pump, I expect them to have good earnings. That's starting to go down now again, but I don't think that'll hit till the following quarter. So next week is the week I really have my eye on, and if any of these companies you heard of, be sure to look them up, see what day they fall on, because it's really a good thing to plan in case you have some money to deploy out into the market. So overall, we saw this week not that great. Next week will be a big week that'll really determine where we're headed as an economy and what the stock market will do. I'm very anxious for it. So I do have some money to deploy, and any companies that are of high quality that have, not so satisfactory earnings or aren't to the expectations of investors that will drop, I will get in there and buy some shares, such as Microsoft, Meta, Amazon. And so with that said, let me know what you think of the earnings of those companies that we went over. Was there any that, weren't good earnings, but you still see a bright future? Or were there any like AT&T where I plan on buying? Would you buy? Are you still like, that's a company you're going to stay far from? I'd love to hear all your opinions, which companies you're most excited to hear earnings of next week. And if you like this type of content, I can do kind of these earnings reviews more often. I've kind of lately been putting companies up against each other and seeing which ones come out on top based on metrics, but I'd love to mix it up, and that's what this channel is. You guys help guide me. And with that said, thank you guys so much. Be sure to subscribe so you don't miss an episode, and have a great day. We'll see you next time on Mark Arnold's Finance.